If you had invested just $10,000 in Bitcoin back in 2015, you would have made $1 million in just 35 months. Do the same in 2018 and that $10,000 becomes $250,000. But in both cases, what actually followed after these runs was brutal. Bitcoin crashes over 75%. This chart you can see on the screen right now shows you exactly when the halving happens. This is a 4-year thing that happens with Bitcoin. Supply gets halved, and you can see here back in October 2012 the halving happened, and roughly 18 months later Bitcoin topped out and crashed 81%. Shout out to the guy who made this in TradingView, by the way. July 16, 18 months later, we topped out and we crashed 76%. And you can start to see a pattern here. Halving happened in April 24. We're approximately 18 months later after a 400% rise. Are we set up now for a crash? You have to bear in mind, since the bottom in 2022, Bitcoin has rose over 800%. It has outperformed any asset class, gold, silver, you name it. Bitcoin head and shoulders above. That's including the Nasdaq, S&P, all the trackers. Bitcoin has massively outperformed them all. The question is this time fundamentally, is Bitcoin in a far better position than it was in those other two occasions? And in today's video, we're going to have a look at some fundamental things that I think suggest that perhaps this time it is different. The idea of Bitcoin's 4-year cycle comes from one thing, which is the halving. The halving, which is the Bitcoin miner's reward, gets halved every 4 years. And because of this, it instantly reduces the supply of Bitcoin into the market. 50, 25, 25 to 12.5, 12.5 to 6.25. This triggers a supply shock that takes months to work out, and historically about 18 months after each halving, Bitcoin hits its top. Now we need to look at something that's different, which is the monetary policy. The Federal Reserve is doing things differently compared to the last two bear runs. In the last two cycles, the Fed were actually increasing rates. Higher rates reduces liquidity, and risky assets like Bitcoin suffer the most. Now this is an interesting article by Swissquote. Bitcoin's price movement mirrors global monetary supply. If we look back to 2013, the first major Bitcoin bull run corresponded with initial uptick in US M2 following the 2008 and 2009 financial crash. As central banks indicated quantitative easing, money supply expanded and Bitcoin rose from under $20 to over $1,100. In 2017, a fresh wave of liquidity driven by low rates and renewed asset purchase coincide with Bitcoin's ascent to nearly $20,000. Again, M2 growth outstripped Bitcoin's market cap, creating momentum and eventually drew global retail and institutional investors into crypto. In the 2020-2021 cycle was unprecedented. Pandemic, stimulus, we know what happened there. It got crazy. The M2 Bitcoin ratio, while volatile, largely trended downward, reflecting that Bitcoin was growing faster than money supply. And you can see by this table, which illustrates that each Bitcoin peak aligned with surges in money supply. So in the last two cycles, we had interest rates going up, but today the Fed is dropping rates. Cheaper borrowing, more liquidity. This is a better foundation for Bitcoin to flourish in, especially when markets are expecting further cuts in 2026, as confirmed by Jerome Powell. And Donald Trump, the President of the United States, has said he will appoint a new Fed chair next year as well, likely to be somebody that's going to be even more favorable to the markets. And here is the base case. Monetary close at 8-10% annual rate, reverts to the channel midpoint. Bitcoin could trade in between 80 to 120,000 range within 12 to 18 months. Bear case, should central banks pivot, change, go tighter, growth slows below 5,000, the Bitcoin could compress, dragging Bitcoin back to the $40, $60 range. But the bull case, with continued aggressive monetary easing, say 12 to 15% year on year, a run towards the upper channel Bitcoin might challenge 150,000 to 200,000. I have been very bullish on Bitcoin, and I believe that this run is going to at least get to 150,000. So when you consider this difference in scenario, it does make things seem possible that the 4-year cycle won't play out this time. The third thing that I want to talk about is institutional demand. This is something that's completely different compared to all the other cycles. As of October the 8th, global Bitcoin exchange traded funds, ETPs, and public traded companies have collectively acquired over 944,000 Bitcoins, already surpassing the total amount purchased in all of 2024. To put this in perspective, these institutions have bought roughly 7.4 times the new supply of Bitcoins mined this year. Within 3 months remaining in 2025, it's safe to assume that this rate will only go up. This has been a massive driver of Bitcoin's strength during this bull run, and despite that, price still hasn't reached the same euphoria levels of previous tops. And if I just turn on one indicator, you can see this heated. Where it goes heated, very hot. We haven't had that since back in December 24, over a year ago when we first broke to the 100K. That's another reason why I'm looking at this going, I don't think we're there yet. This chart shows Bitcoin price compared to its long-term on-chain value, basically how overvalued or undervalued the coin is. In 2017, Bitcoin traded nearly one full magnitude above. In 2017, you can see the elevated levels that we got to, and the same for 2021. However, this time around, we haven't went to that crazy euphoric level. And when you consider all the institutional buying, you can consider interest rates going down. It does feel like all the catalysts is there potentially fundamentally to change the cycles that we have seen prior. So what I'm thinking is potentially do your own due diligence, of course. But what happens if the 4-year cycle rule is gone now? We don't have a 4-year cycle rule. That could change. The first cycle that Bitcoin ever did, it didn't follow this cycle that we're quoting right now as the 4-year cycle. So we didn't have that initially. That wasn't the first cycle that there was. So now I'm looking at it going, okay, we've had a few 4-year cycles in between. But what happens now with all this institutional buying and all the stuff that we've just talked about? Who's to say that we're not only halfway through the current bull run? Who's to say this isn't going to be a longer cycle? All the things coming together, it just doesn't feel like this time around this was a bull run. It just doesn't feel like that for me. I also don't hear the taxi men and local people talking about it. I remember that in 2021. I remember everybody was wanting Bitcoin. And considering the last year has kind of been a sideways movement, really, are we not due a pop? Why not see this as a consolidation before the rip? Why is everyone being fearful because of this 4-year cycle thing? But of course, there's no theory that's perfect. The 4-year cycle could easily play out. You must do your own due diligence, of course. This is just my thoughts on the whole situation. So have we seen the top of this bull run, or are we only getting started? Leave your comments down below. And if you want to support the channel and get free access to the Discord and a free trading course, there's a link down below. You can check it out. Apart from that, enjoy the rest of your day, and I'll see you all in the next video. Peace.